Lucy in the Facebook group, she rocked up and said, "What up, gangsters? What is up? I have removed voluntarily paying $100,000 or $100 a fortnight." Yeah, rich much, Lucy. And we've got Phil Thompson from Sky Wealth here, friend of the show. Hey, Phil.
Hey.
Jimbo Millard, James Millard from Sufficient Funds.
Hello.
You're here as well.
Present.
Here for the next couple of episodes. I have removed voluntarily paying $100 a fortnight salary sacrifice to my super fund from my work pay. It's a good thing to do. Anyway, I thought the gross would show $100 more, but it's showing $72 additional as my tax increased by $32 a fortnight. I think Lucy meant the net there. So effectively, she thought maybe that there's a different number, but I don't want to bury the lead. But the next question is what I want to scratch and double click on. My tax agent said it's better not to salary sacrifice at my age, early 30s, and put that extra $100 to my mortgage.
Oh,
thank you, Professor Science. However, it's not $100, and I know it's taxed with super, but I just get confused about the amount it's taxed through my pay and wondered which way works best. The extra going to the mortgage or super, and how much gets taken with tax. So, Philly, 101, if we're on a 32% tax rate or whatever it is, is it 32? I always forget.
There is a 32% tax rate, yes.
Add a bit of Medicare levy, that gets you to your tax rate with money that you get in your bank account.
Yeah.
If you put that money to super, the tax rate is?
15% inside of super.
So is 15 less than 32?
yes. 17, yes.
Yeah. So what's the problem?
So the difference is we've got $85 going into the super account.
Yeah.
Out of that $100 pre-tax, $85 is going into the super account or $72 is going to your bank account. You got one of those two options. And that $100 is always pre-tax. And so that's
sorry,
where Lucy
I'm
was
an idiot.
about.
Sorry, it's 32 including the Medicare levy.
Yeah.
And we got someone, I think, who was on the show? Martin on Retire Right. He got run over the coals. Someone was like, I was disappointed. You bloody got the tax rate wrong. And it's 30, not 32. He's like, oh, I kind of just was including the Medicare levy.
Yeah,
so.
we can't escape that.
That applies as well.
Well, there are some carve-outs, but probably in her situation, it's no carve-out. But 32% including Medicare levy.
Yes. And so that's what Lucy's referring to. She's got $100 pre-tax. She's gone, well, that was going to super. Let's actually just take that. We'll put it in the mortgage. And that's why we're seeing $72 in the bank account.
Yep.
And $32 going to the ATO. Thank you for your donation.
So the tax agent, who is holier than thou, is saying, don't you be salary sacrificing at your age in your early 30s, Lucy. It's better to go on your mortgage. Here is a statement of advice with, with this financial advice that I've given. I don't know. I wrote in the Facebook group, sounds like unlicensed financial advice to me or undocumented or something.
I enjoyed it.
Both.
Look,
Both.
Let's just clarify. Accountants can give you tax advice and they can give you an opinion on what to do when it comes to your tax. Superannuation is a financial product. It's legislated to give advice on a financial product. You need to be a licensed financial advisor and you need to give that advice through a statement of advice. And so that's where, all us, traumatized financial advisors who have been hammered into us that we can't even talk to anyone about, whether they should salary sacrifice or not, because it's an easy question and a relatively simple options. But to give a statement or an opinion that influences a decision
Is advice.
is financial advice.
And for us would require documentation that takes a little while to
crazy amount of
put
work.
together.
So, look, I don't want to get held up in the weeds and the risk of three friggin' boomers here having a chat about, someone giving unlicensed financial advice. I just wanted to talk about this because anyone that I've ever dealt with in my life who has got to age 65 or 70 and retired with a healthy super balance, no one has regretted putting extra money into super. If you don't miss it, you don't miss it. Keep it going. If anything, it can cover some of the insurance premium. Yeah. So I think, Lucy, my tax agent, it's better based on what? Have you got the discipline to automatically get your employer to pay that $100 into the actual mortgage, bypass any bank account?
And if you want to look at return on investment, interest rates are dropping on home loans at the moment. And I mean, now we're in the mid fives, basically, low fives probably, really, yeah, by the time we get there. And super, I mean, unless you're invested really conservatively, once it gets in there, which let's not forget, like Phil just outlined, you're getting more in super because you get a better tax rate on the way through and you get the deduction personally. The return on investment with a long-term higher risk approach is likely to be 7, 8, 9, 10%. And by the time you get there, it's completely tax-free.
Yeah. And this is where, if Lucy was earning, $15,000 a year doing part-time work and salary sacrificing, well, from a tax position, it's fine for the account to talk about, well, you're getting taxed in the super fund, but if you took that as take-home pay, you wouldn't get taxed. But, that's not the case in this situation.
Yeah. Anyway.
We just need to know probably a little bit more around Lucy, but how much is the 100 a fortnight all she's got left? Is there a lot more? Could she do a bit of both? Maybe.
Right. Is it pocket change in Lucy's world, and is she spooked because it's not the right money decision because of the accountant or the tax agent? Anyway. Hey, it's Glenn here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money, Money, Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, and there's a link in the description to get your hands on a copy. Thank you so much. Bye.